All right. Good evening, everyone. Welcome back, everyone, to one of our online live sharing classes. Now, today was supposed to be a day off, so, a day to rest for professional investors. However, we're continuing the live broadcast for two main reasons. First, even though the Indian market is closed today, the largest financial market internationally, which is the USA market, is still open. So we still need to track and analyze the international market environment and the important events happening globally. Please note that this work is continuous and it requires ongoing monitoring. Now, second reason. So as many of you know, we've begun our comprehensive expansion into the Indian market. We will proceed with various tasks based on the development plan and the deployment of our company headquarters. In addition, the wealth growth plan that many of you have been concerned about has officially started. It's understandable as everyone wants to make money and profit, right? Okay, currently we have specific plan in place and we're going to be sharing and introducing it to you in detail very shortly. Okay, going over some of the contents. So as for today, what contents am I going to be sharing? Now, because the Indian domestic market is closed, we have already analyzed that market yesterday as well. So tonight, we're going to take a brief look at the overall trend of the US market. Furthermore, as I've mentioned, we have already started to fully enter the Indian market. So what kind of arrangements does the company headquarters have? What is our wealth growth plan? And how can we achieve this wealth growth? So tonight, we will give you a detailed introduction and share some of these topics. This is also a focus on our work in the future. Now, the development of our company in Indian markets so far is definitely inseparable from the support of the vast number of Indian investors. So, thank you for the support from everyone present. In our futures work, we will definitely build our service system consciously. So, use more innovative and profitable trading strategies to help everyone gain more profits in the market. I'm not going to dwell on this much longer, so let's begin with some of today's contents. Okay, market recap. So regarding this market analysis part, today we will mainly focus on the US market. Now, on one hand, it's because the domestic market is closed, obviously, and then on the other hand, after all, the United States is still the world's largest economy, and its financial market will have an impact on any major economy globally. So, how was the US stock market yesterday evening? So, due to economic data showing a balance of rising labor costs and deteriorating consumer confidence, the Federal Reserve started an important policy meeting yesterday to decide on the direction of interest rates. Now, the US stock market ended lower on Tuesday, and the magnitude of the decline is quite significant. So, let's take a look at these specific situations. Okay, so S&P 500. Now, everyone may have noticed that the decline in the US market yesterday was very, very significant, with the three major indices. So we're talking about the NASDAQ index, the S&P 500 index, and the Dow Jones index all falling by around 1.5 to about 2%. Now, we will not comprehensively explain all three of these major indices today. We will use the chart of the S&P index as a case study to share with everyone here. So from this chart, the impact of the previous trading day was quite significant. In fact, there wasn't any major negative news in the US market yesterday, and the Federal Reserve's policy meeting was still ongoing, with its interest rate decision not yet announced. So, in my personal opinion, yesterday's decline is more likely due to the internal demands of the US stock market itself. Now, on one hand, the trend of the US stock market has been relatively weak recently. On the other hand, since the rebound starting from April 19th, the rebound level has already reached around the Fibonacci 50% retracement level of the previous decline, which inherently comes with certain pressure. So, hence, a pullback from this level is considered normal. Looking at the current trend, the index might even retest the previous low support and potentially hit a double bottom. From the chart you see here, can everyone see how much stronger the Indian market is compared to the US stock market? Right? So do you all remember? Yesterday, our Indian stock market Nifty 50 index once again hit a new all-time high. Now, regardless of the market performance, after hitting a new all-time high, a new high is still a new high. So regardless of what happened during the day, we still hit a new high. Now, considering the current trend of the US stock market, it is likely to affect the opening situation of our Indian stock market tomorrow, unless there is a significant surge in the US market overnight, but I believe this possibility is going to be very, very low. So the Indian stock market had already seen a peak and a pullback yesterday. So considering the adjustment demand in the Indian domestic market itself and the impact from the US market, it is expected that the Indian market may not perform very well tomorrow, unless there is major positive factor. So that is kind of like an idea of how the US market affects every other global indices, right? So if they're not going to be performing well, expectations should not be too high for our very own indices as well. So we proceed with caution. That is going to be the general term that we're going to be heading into for tomorrow. Okay, so we're going to be jumping into some macroeconomic news. We just analyzed the overnight US stock index. And at the same time, we have also discussed the possible impact on the Indian stock market. Now, I believe everyone should have a general understanding of tomorrow's market. Please note that we can only have a framework understanding. We cannot predict tomorrow's trends with 100% accuracy. There are some people here often asking me, "Sir, teacher, can you help me accurately predict the trend of XXX stock tomorrow?" And other similar questions as well. So I'm going to reiterate that we can make market predictions, but it's definitely impossible to predict something 100% accuracy. Only God can do such things. Now, we can only conduct rough analysis and expectations. But all of this needs to be based on your own trading plan. Without a clear trading plan and execution, any prediction is meaningless. So we're going to be moving on to some news now. Let's continue to pay attention to the important financial news or the major international domestic events. Okay, so let's first take a look at the latest report. So according to Securities and Exchange Board of India, the SEBI, on Tuesday it allowed non-resident Indians, so NRIs, to own up to 100% of global funds in Gift City, providing passive funds with more opportunities to invest in group companies. Now currently, NRIs and overseas citizens of India cannot hold more than 50% in foreign portfolio investors. So those are our FPIs. Now, this move may pave the way for more funds from India diaspora to flow into the domestic stock market. Market experts believe that liberalization of the NRI and the OCI regime could bring dual benefits. So, promoting the development of the fund ecosystem in Gift City and attracting genuine capital flow from overseas Indians. Now, currently, the total holding of NRIs and OCIs in global funds must be less than 50%, with a maximum individual holding limit of 50% for each NRI or OCI. Now, this means that there will be new capital entering the market next, which is incremental capital for the market itself. This incremental capital does not depend on willingness to intervene, but the policy change that now allows capital to enter. Earlier, I have been sharing a viewpoint with everyone that only capital, yes, only capital is the most direct force that drives stock prices higher. Do you all remember? We're talking capital funds. So with this entry of these capital funds in the future, is it positive or is it negative for the market? Of course, it's positive, as these funds will certainly have a positive impact, though it will take some time for these funds to fully enter. It will be a long-lasting process, so it can be said that currently India's national policies are very favorable for the stock market. So we are full of confidence in the long-term bull market in India, and we will have more specific plans and strategic arrangements. We believe that all of us can reap more profits in India's super bull market and achieve greater success. Okay, so good news here. Lots more foreign money is going to be pouring into our stock market. Okay, jumping into the second piece of news. So, India needs hard reforms to reach GDP growth of 7.5%, says HSBC. Now, although the Indian stock market is in a super bull market and is also the fastest growing economy globally, doesn't mean there is no need for further efforts. Can we just relax without any worries? So apparently not. So chief India economist at HSBC wrote in a report on Indian elections that even with easy to moderate reforms, the economy's growth rate could reach 6.5% in the medium term. To achieve growth of over 7.5%, moderate to severe reforms are definitely needed. Now, Prime Minister Narendra Modi, seeking re-election in elections before June 1st, has been striving to make India a developed country by 2047. That's not too far from now. So, although he has not explicitly stated the implications of his goal, economists say that to become a high-income country, according to the World Bank's definition, the Indian economy needs to grow by over 8% annually over the next 25 years to achieve this goal. Now, HSBC stated that if the government continues with basic infrastructure investments and simple reforms, controls fiscal deficit by 4.5% by 2025-2026, and supports investments in future industries like semiconductors, the growth rate in the next 10 years could reach 6.5%. So, from this perspective, the outlook is broad and promising, but national efforts are still needed to achieve India's soaring success. So, let's hope that all of us can contribute to India's development. This way, we can all enjoy the benefits of national development and ultimately achieve our personal wealth goals. Lastly, Okay, so last piece of news that we're going to be going over. Bracing for shallow Fed easing, bond investors take the middle of the curve road. So let's continue to look at some relevant information about the United States. So currently, U.S. bond investors are selectively adding longer-term bonds to their portfolios, betting that the Federal Reserve will delay rate cuts and cut rates at a slower pace than in the previous easing cycle. So first deciding to keep rates unchanged at this week's policy meeting. Now, due to stubborn U.S. inflation and a still strong labor market, the market generally expects the Federal Reserve to keep rates stable in the range of 5.25 to about 5.5% by the end of the two-day meeting on Wednesday. So Federal Reserve Chairman Jerome Powell may take a cautious, hawkish stance on the economic outlook, reinforcing expectations that the first rate cut will be delayed until September or even December. So for 2024, U.S. interest rates futures traders expect only one 25 basis point rate cut, most likely at the end of the year in December. So when will the Federal Reserve start cutting rates? If they do, and by how much? And how often will they cut these rates? So the impact of this event on the market in the near term is decreasing significantly unless the Federal Reserve makes an unexpected policy decision. So what still has a significant impact on the market is the profitability of businesses, whether in the United States or India. In addition to paying more attention to this aspect, we should analyze the market from a technical analysis perspective. The above is some of the interpretation of the major market news today. I hope my thoughts can provide some reference and some guidance. So coming up next, I want to continue to introduce and share more important matters for this evening. So, Asia Pacific headquarters, okay? So, as I've mentioned earlier, we have already begun our comprehensive entry into the Indian market. And the headquarters has also made strategic development plans and a series of arrangements for this. So, in recent years, the Asia Pacific region, as one of the main markets of the asset management industry, has developed rapidly, with the market size growing larger and larger, especially in the Indian region. It has become the country with the fastest economic growth globally. Our company has been long laying out in the Asia Pacific region. So due to the astonishing development speed of this region, our company's current management mode needs further optimization. The company has decided to establish the Asia Pacific regional headquarters. So due to this huge development potential in the Indian region, the location of the Asia Pacific headquarters will be ultimately decided through a competition by the four major regions of India, Hong Kong, Japan, and Singapore. So we are going to be officially launching this large-scale event. So it's going to be the Battle of the Four Titans for the Asia Pacific headquarters destination. So next, quickly determining the location of the Asia Pacific regional headquarters will be beneficial for the further development of the company in the Asia Pacific region. So this is exciting news. We want to be getting our votes in, and we want it to be in India, of course. So after several years of strategic layout in the Asia Pacific region by our company's headquarters, significant achievements have been made, especially since entering the Indian market. Our market size has further expanded, and the market share is also continuing to increase daily. Now, given the rapid development of the company in Asian region, the further expansion of business's scope and the enlargement of business's scale, especially the explosive growth of business volume in the Indian region, the operational mechanism and management mode of the company in the Asian regions need further optimizations. So, to celebrate the successful expansion of the Indian market and the other regions in Asia Pacific, and to rapidly increase the company's market share and the industry reputation in this Asian market, we need to further occupy and expand our asset management scale in Asia, especially here in India. So, in order to smoothly determine the location of the Asia Pacific headquarters on June 28th, 2024, after a unanimous resolution by the senior management, the large-scale event, so Battle of the Four Titans, competition for the site selection of the Asia Pacific headquarters will be officially launched. Now, this Battle of the Four Titans competition event has been approved by unanimous resolution of the company's senior management. Now, as a part of the company, our Indian team must strictly follow the arrangements of the London headquarters. So, on the other hand, if our Indian region can win this competition, it will be a recognition of all the work of all the members of our Indian team. Meanwhile, the company headquarters will also provide more policy support for the Indian market, bringing more benefits and better welfare support to the vast investors in the Indian market. So this is quite exciting news. So senior management has already given us a go that we're going to be able to even compete with Hong Kong, Japan, and South Korea. Okay, so since the company's headquarters has arranged and guided this Battle of the Four Titans competition for the Asia Pacific headquarters location, how exactly will the location of this Asia Pacific headquarters be decided? And what are the specific details of this event? So I'm going to go over this event point by point, and then we could take some questions maybe later on. So first of all, India, Hong Kong, Japan, and Singapore, the four major regions, will evaluate the market share through the number of participants between May 2nd, which is tomorrow, to May 10th, and the asset management scale up to June 28th, 2024. Now, in order to finally decide on the location of our Asia Pacific regional headquarters, this is going to be crucial between 5th of May 2nd to May 10th. So this location selection event is divided into two steps. The first step will assess how many participants are supported in each region between May 2nd to May 10th. The second step is after the comparison of the number of supported participants from the first step is completed, it will enter the stage of comparing the asset management scales of each region until June 28th. So first, we're going to measure the participants, then we're going to assess the assets that we control. So finally, the two aspects will be combined to evaluate the market share and decide on the location of the Asia Pacific headquarters. Now, it seems like everyone is not very clear about the documents detailing these activities that they are currently seeing. So I'm going to introduce each of these main content items in more detail, one by one. So let's continue to look at them. Okay, so first one, we went over the four major regions. So we're going to be jumping into the second one. So many people now have a question, which is how do we compete in terms of supporting numbers? How can we support our teachers to help support you? right? So this question is very simple. As long as participating members in various regions vote on our company's regional asset management accounts, or more specifically, they must use our company's asset management app. After entering the app, you just click on the vote button in the system and then select confirm support. Each account can only vote once a day. As for the specific usage method, my assistants will teach everyone later on. Now, the final ranking will be based on the number of support votes in our system. So everybody's going to be using the same system in each of their regions. So most amount wins. So the support from everyone is extremely precious to us. In fact, it is not complicated at all. You just need to vote support once a day, and then perhaps your support is enough to make our India campaign successful. Okay, so some of the new members may ask, why should I support you? Why should we support us, right? So first of all, we want to deeply cultivate and achieve significant development in Indian market. And even in the future, to accomplish our ambitious goal of becoming the number one in the same industry in the Indian market. Now, all of this cannot be achieved without everyone's support. So for this reason, the company's headquarters has invested a huge amount of money to bring everyone a benefit. Of course, this benefit is also a way to give back to everyone supporting us, not as an exchange condition, but because we deeply understand that we can only earn everyone's recognition and support through sincerity, service, and more profits. There is no other way. So for those who open an asset management account with our company for the first time, can randomly receive interest-free trading funds ranging from 10,000 rupees to about 50,000 rupees. The interest-free trading credits can be used from May 2nd to May 10th, up until midnight, 1 minute before midnight. And all interest-free funds will be withdrawn starting from the 11th of May. So the interest-free trading credits cannot be withdrawn, but the profits obtained from the trading belongs to all our investors who support us and can be freely withdrawn after May 10th. So the profits from our trading. So after using our app, everyone can trade and profit through the app. At the same time, you only need to click on the support vote once a day in the system. For everyone, it's just a small gesture, but for us, it means an additional support and affirmation. Okay, so now that I have said providing everyone with the interest-free trading funds is also to allow everyone to reap additional profits during this period. In order to demonstrate the professionalism of our service, all trades during this event will be uniformly guided by our company's traders. This is not only to ensure the accuracy and the timeliness of the buying and selling points, but also the experience, the higher quality investment services provided by our company. So during the period of May 2nd to May 10th, as long as you follow the guidance of the traders for trading, any losses incurred will be borne by our company. So we will take responsibility of all losses. In order to ensure that all investors in India region achieve sustained and stable profits during the experiential support period. And also to help the India region successfully win the regional asset management scale competition ending on June 28th. Now, this event will be assisted by senior traders from the India region to confirm exit and entry timing of stocks every single day. Now, no matter from which perspective, this event is beneficial and harmless for everyone. It would only allow everyone to gain certain profits without any disadvantages factors. So every risk, every factor of negativity is going to be borne by us. Now, about the wealth growth plan that has been talked about with everyone all along. Now, this plan runs parallel to our Battle of the Titans event activity. So there is no contradiction whatsoever. We provide interest-free trading funds for everyone to use. So wouldn't you say that this is all for wealth growth? We have also have traders to provide guidance for our members, so there's no risk, and it's just a matter of how much profit do you really want to make. Now, of course, our wealth growth plan is not that simple. Profits needs to be earned step by step, and wealth also needs to grow step by step. So in order to achieve stable returns, our wealth growth plan will have different trading plans set for different stages. Since we entered the Indian market, we have received great support from everyone here. So here, on behalf of our company, I want to express my gratitude. The Battle of Four Titans activity will officially start tomorrow, so I hope to continue to receive everyone's strong support. Your support is supporting our company and also supporting me personally, so I want to thank you again. So, how to ensure the smooth implementation of wealth growth plans. So here's another issue to talk about, right? Which is, how do we ensure the smooth implementation of wealth growth? So in other words, how do we ensure profits as well as a high success rate of profits? What I can tell you is that we will ensure our high success rate of profits by trading in a way that triggers stocks hitting their daily limit. So next, let's first take a look at the theoretical basis of this highly profitable method of hitting the daily limit. So it can be divided into several aspects. So the first one is hitting the upper circuit limit can trigger the market. It can also push up a wave of the market and drive the markets to the moon. It can skyrocket the markets. It can turn stocks with prices of a few rupees or tens of rupees into hundreds or even thousands of rupees. It can bring huge profit to the investors who capture it. It can attract billions or even hundreds of billions of capital to a stock. Now, it can refresh and the stock price history, making the stock to shock the entire market. Now, when a stock price hits the daily limit, it indicates the strongest desire for a sharp rise in the stock market, and the first daily limit often marks the critical point for a short-term rise. Now, when a stock itself has a sudden impact of a significant increase, such as a sudden major positive news, market reversal, but is forced to stop at 10 or 20%. The numbers here are just examples, subject to actual market restrictions, right? The next day, due to its own upward momentum, it has to continue to rise, which presents a clear speculative opportunity. After a stock hits the upper limit, for those who originally wanted to sell the stock, they will raise their psychological expectations and then sell at a higher level. And for those who want to buy, since they cannot buy at the higher level, since they cannot buy it at that point, they're going to strengthen their confidence in the stock and be willing to chase it after it hits another higher level. So therefore, hitting the daily limit has a significant impact on boosting or dropping prices. When a stock is about to hit the daily limit, if you can quickly judge that the stock price will remain at that upper limit level for the rest of the day, then entering immediately will give you a very good profit opportunity for the next day. Now, The upper limit technique is one of the important tactics for short-term operations. If this technique is used properly, the potential profits can be substantial. So, case study time. So let's take a look at this specific chart. Now, I have already marked it very clearly. So, after the market has been in a period of consolidation for a long time, the first limit up appeared. The limit up directly initiated the subsequent continuous rise. So therefore, this limit up board is the starting point of the market. And at the same time, there were continuous limit ups during this overall rising process. The role of these daily limit ups is to further propel the upward trend into depth. So these limit up boards drove a very strong upward trend. In fact, from the first limit up, the price of the stock has increased by more than 100% already in this graph. So starting from the first daily limit, did it initiate the market? Did substantial upward trend follow? Objectively speaking, regardless of the trader, as long as they are a technical trader, it is simply impossible to earn all of these profits. So should we lower our profit expectations? Can we aim for just 20% profit, or even just 10% of profit is acceptable? Of course, there are price corrections in the rising process of this graph, but there is indeed a trend of continuous limit ups. For traders, these continuous daily limit reaching at the top represents a certainty of profit. So you're going to see here, first one, price push, the price just skyrocketing, right? And then you can see here at the bottom, I've marked it. This is our first limit up. This is our first daily limit that we are capped. Next day, kept jumping, small correction, jumped again, and then we're off. Here's another case. So another case study that I want to dive into, right? This stock also experienced a very strong upward trend. I've looked at it before. So from the first time it hit its daily limit, the position indicated by this arrow right here. Now, although the current increase is not yet 100%, it's already very close. The sharp upward trend in this graph also started from the first limit up board. There are definitely various upward trends in the market. The trend we are sharing with you now is just one of the many. So, as we have shared before, money is the most direct reason for driving stock prices up. Looking at this graph, you can clearly see that during the process of the stock price hitting its daily limit, the trading volume significantly increases. So, what are these trading volumes? These trading volumes represent money because only with the inflow and outflow of the money can the trading volume increase significantly. You can see at the bottom boxes, you will start to see all these green candles. Those are the amount of volume being injected, right? So as this stock, for an example, did it start a major trend from the first daily limit? There is a relationship here that you need to pay attention to. Not every first daily limit up can trigger a super trend. In fact, it is not necessary. For traders, it is enough to make a profit from a very small portion of this. Okay, so jumping into the next thing that I want to talk about. So, why are these stocks rising? So, why are these stocks hitting their daily limits, right? So, we talked about this topic before, which is when the stock price has a strong desire to rise, but its increase is limited by market rules, so leading to the occurrence of hitting their daily limit. No stock can rise without reasons. So why do stocks hit their daily limit? Tons of reasons, right? So for example, we got policy reasons. When a policy favors a certain industry or a certain stock, the market's going to interpret that, leading to more people buying the stock, causing the stock price to rise. Another example is performance. It is clear when the performance of a stock increases significantly, it can also be reflected in the stock price, sometimes leading to the stock hitting the daily limit and sometimes not. Now, there's other reasons that include asset restructuring, speculative trading based on certain concept, oversold bounds, sector linkage, the impact of changes in surrounding markets, market trend reversals, and so forth. There's tons. All these reasons belongs to the fundamental factors, and there are other reasons besides these, of course. So there are so many variables when it comes to why the stock prices rise. So most of the time is usually performance, sometimes policy. So this is the first reason that I wanted to go over. Now, the second reason why stock prices are always rising. So the important reason for the stock price hitting the daily limit is the push by major funds. The daily limit is the result of the operation of major funds. The daily limit realizes the strategic and tactical intentions of these major players. So in fact, this is somewhat similar to marching and fighting. Whether it is big funds or small funds, any funds entering the market aims to profit from the market. So these major funds in the actual operation process may also leverage those fundamental reasons mentioned earlier, such as performance growth, policy dividends, oversold rebounds, and so forth, right? As for how major funds operate to achieve their ultimate profit goal, that is a whole other topic, which we're not going to really dive into today. What I do want to tell everyone today is that regardless of the reason, the rise in stock prices will ultimately come down to the funding aspect. So, a couple of crucial things here we've gone over in the last couple of sessions. Funds are very crucial to how these upper circuit limit stocks operate, right? We need major funds to push day after day. And the exchange knows. So they put a cap on it. So we must capitalize on these advantages. All right, so everyone, that is all for today's online course. We're gonna be going over before we close off today. Please make sure you guys get the app. Give us a vote. I will be forever grateful. The content that we've went over on the the UC limit stocks, please go over the content again. Memorize it. Apply some of these things into your real life trading strategies. Our next online broadcast is scheduled for May 3rd at 8 p.m. So that is Friday, not tomorrow. I hope to see everyone here again and have a wonderful evening.